Hey, welcome back to the channel where we talk all things engineering, technology, and finance. Before getting into today's content, make sure you hit the like button below and don't forget to subscribe to the channel so that way you're up to date on all the latest content that we post to our channel. And lastly, make sure you share the video with friends and family. As I always say, we don't want to hoard the knowledge for ourselves and we want everybody to learn. So let's jump into today's content. Hey everyone, welcome back to the channel. And welcome to an interesting video of how I like to look at it, as I ended up taking my vacation time and turning it into investment. How so, you may ask? Stick around and I'm gonna break it down for you. I used to work for a company in which, in my opinion, they were very, very generous with their time off. So much so that I think maybe a little too generous. Let me show you what I mean. Come on, let's head over to the computer. Welcome to my desktop, where I have up here a calendar that was given to me for 2021 at the previous company that I was in. And we're gonna take a look at how this calendar is read and what is the time off, so that way everyone can have an understanding as to what the payout looks like. Every calendar year, we were giving 120 hours per year. 40 hours a week, that equates to 3 total weeks of time off. Now that we know that we get 120 hours per year, which is a total of 3 weeks, one of the really cool things that they allowed us to do is we were allowed to roll over those hours every single year if we didn't take any time off from a vacation perspective. And you can do up to a maximum of 400 hours that you can put in this bank. After the 400 hours, you are no longer going to accrue any additional time. So it always made sense for you to make sure you were under that 400 to make sure that when the next accrual date came, you were able to take advantage of the hours that were going to be given to you. Now, vacation aside, we were also given an additional week, and we were given that additional week for any sick time, and that was at your own discretion. And then on top of that, we were given also what is called floaters, meaning additional time that you can use in order to decide if you wanted to take another day off. And I believe, if memory serves me correctly, those are an additional 14 hours. So in total, we had 14 hours for floaters. You also had 40 hours for your sick time that you can use for anything that you needed. And then you also had 120 hours of vacation time, so 3 weeks per year, which you can roll year over year up until you hit the maximum of 400. So now that we went over a couple of those things, let's look at this calendar and see how it works out. So I'm going to focus in the month of December, because December is kind of an interesting month. And as you can see here, there's a couple of months with the blues and the greens and the reds. So what do those mean? Now that we focus on December, I'm going to take a look at the second week, so that way we can kind of go through it together. At this company, we only worked 4 days a week. Hence why you see every single Friday in green, meaning it's an off day. And as you can see here in the legend, that we have a scheduled off day, and we worked 4 10s, 10 hours a day, 4 days a week. There's your 40 hours. So therefore only 4 days are worked. And then you have what's called your fixed holidays, meaning these are holidays that the company recognizes, and you had that time off regardless of the vacation time that I spoke about, which was 120 hours you got per year, regardless of the extra week that you got off or any sickness or anything of that nature, and regardless of your floating time, meaning time that you can take whenever you need it at certain times. So this was all separate. So meaning, for example, the week of the 27th, this 27th through the 30th, the company shut down. So we had that whole entire week off, regardless of whether you used any of your other time. So now that we know what the green and the blue are, let's take a look at what does the red mean. Red means the end of the accounting month. And this is where you would accrue your time off for the vacation. Remember when I talked about having 120 hours per year in your vacation time? You accrue those hours every single month, and they're 10 hours per month. 10 hours per month, 12 months of the year, there's your 120 hours. When I spoke to you about having that vacation time and we maxed out at 400 hours, you want to make sure that, for example, the month of December, by the time you left work on the 23rd, because of course you have Friday off every single week, you don't work Saturdays and Sundays. So meaning that by the time you finish working on the 23rd,
you need to make sure that you are under the 400 hours and specifically at 390 because you accrue 10 hours per month. And anything over that, you would lose those hours. So you always made sure that you were under the 400. And that's an example of how we read this calendar.
As you just saw on my computer, that's right. We had 4 days where we worked instead of 5 days. We had holidays, fixed holidays. We had the floaters that you saw, meaning that those are days that I can use whenever I wanted. And then on top of that, I had 120 hours, as you saw in the calendar, that we get every year. So that's 3 weeks. And the crazy part about it was it kept rolling and rolling and rolling, meaning you can carry those hours, as I mentioned before, to the next year, up into a maximum of 400 hours where you can no longer accrue. It was in your best interest to keep track of that time and understand when the next cycle of accruement happened, meaning the next round of hours that you were gonna get. And once you had that, you wanted to make sure that you stayed under the 400 so that way you can get the next set of hours and make sure you weren't missing on those hours. After I was explained how all these hours worked and everything that was given to me from a benefits package, I started to think to myself, and this was at a young age, I said, you know, does one really need that much time off? Now, a lot of people can argue that yes, they do. And I don't blame them, right? That's obviously their life and the choice that they want to make. But for me personally, I said to myself, you know, I don't think I need that much time off. After I came to that realization, I said to myself, you know, I can look at this as an investment account or an account that I can use and it'll grow with me over time. Because the interesting thing about it is when I started accruing, those hours were paid at a lower rate than what I got paid towards the end of my tenure with the company. So to give you a quick example, let's say I got hired into the company at $20 an hour, and over the years I kept rolling the hours over and over and over. And let's say through the years I also got promotions and raises and so on and so forth. That $20 that I started with maybe now ended, and I'm gonna make this up, at $40. So meaning that those hours that you saved and accrued years ago, instead of getting paid out $20, you would get paid out at $40, which to me meant like it was a mini little account that I could use to cash out when I was going to leave the company. And let me be clear about this, because a lot of people think that they're never gonna leave a company. You're always gonna leave the company. And either a couple of things are gonna happen. A, unfortunately, they get rid of you. B, you find a better job or a better opportunity and you end up leaving the company. Or C, unfortunately, you're no longer with us on this earth and you're obviously not gonna be at your job at that point. Point is, you will eventually leave your company. I knew I was eventually gonna leave. I didn't know when, but I knew I was gonna leave. And I looked at this account as a big payout in order to invest it in other things that will pay me for the long term. Let's head over to the computer again and let's see what that payout was when I left the company.
Let's talk about the accrued PTO payout. The accrued PTO payout was the 400 hours that I was talking to you about earlier, that you can accumulate up to 400 hours and you can get paid out when either three things happen. And remember, we talked about that. You either get fired, you either find a better opportunity, or you move on to greener pastures. And we all know what that means. In my case, I had a total of 391 hours. So I was 9 hours shy of the 400 hours. 391 hours at a $50 and a couple of cents rate. We have a total of $19,559.21. On top of that, we also had our fixed PTO, and this is the 40 hours that I was talking to you about that you get per year. That is a total payout of $2,000.94. If you're doing the math with me, that's how you get the $21,560.15 that you see right over here. Now let's scroll down a little bit more so that way you can see some of the other things that we have coming out for this pay stub and how it all ties in together. Before tax deductions, this section means that it's money that's pulled out for any benefits that I have before any taxes are taken out by the federal government, or if you happen to live in a state that takes out state taxes, you'll see all these benefits listed here and the money will get pulled out before anybody else gets paid. In my case, I have dental and vision, and dental was $7.20 and vision was $1.94. So as you can see, a total of $9.14 was taken out prior to any taxes. Moving on to the next. Taxes. This is where the federal government takes their fair share. or so they say. From a federal tax perspective, a total of $6,344.17 was taken out of this payout. Now, the last box here is what we call the after-tax deductions, and these are things that you pay for after all taxes have been taken out. Pretty simple. The first one here is the Roth SSP, and that basically is a Roth 401k. And I contributed $320.15 per pay period. And in my case, I got paid every single week. So as you can imagine, $320.15 came out 4 times per month. And that gives you an idea of how much I was contributing to the 401k at that particular time. And then also as well, I had some long-term disability insurance, which was $4.08. And that gave you a grand total of $324.23. Now, moving to the last part, which kind of sums all this stuff together, and you can see the payout. We had a total of $21,560.15, which was the gross, meaning before any taxes were taken out, any deductions, all that. And then after that, we move into the federal tax gross, which means that after some deductions, this is what the government taxes me on. So $21,551.99. And total taxes taken out were $6,344.17. Total deductions was $333.37. And if you do the math there, what hit my bank account was $14,882.61. Now that we've seen the full breakout of what my vacation hours turned into, let's open up an investment calculator and do a couple of scenarios where you get to see the money invested for a 15-year period and a 20-year period, and you can see how much this particular payout turns into. And this is how I was able to turn my vacation into an investment. So with our investment calculator up, let's put in our starting amount. And of course, our starting amount is the money that I got paid out for my vacation. And that was $14,882.61. Now remember, we talked about leaving the money in the account for 15 years and then also a 20. So let's start off with the 15 years. So let's see what it does after 15 years. Our rate of return is going to be 10%, and that's going to compound annually. As we talked about before, we're not going to contribute any money, and we're just going to see what this money grows into. And let's go ahead and calculate that. As you can see here, in 15 years of not touching this money and not doing anything with it whatsoever and not contributing a single dime to it, this money is going to grow to a total of $62,168.36, meaning I put in only $14,882.61, which was the vacation time that we have here. I didn't contribute anything else to it, just left the money alone, and in total interest made $47,285.75, which is really, really incredible. Now, we did talk about leaving the money in there for 20 years. And let's see what 20 years gives us. And here are the numbers for 20 years. We have an ending balance of $100,122.76, meaning I only put in my vacation time and invested that money, $14,882.61, and total interest, it produced $85,240.15, and I never contributed another penny to it. How incredible is that? We took time that was given to me in vacation, turned it into an investment that will produce income for me and my family for years to come.
There you have it for today's content. Remember, don't forget to like the video, and as we mentioned, subscribe to the channel so you're up to date on all the latest content that we post to the channel on all things engineering, technology, and finance. Finally, don't forget to share the video with friends and family. We always say this, we don't want to hoard the knowledge for ourselves. We want everybody to learn. So make sure you share the video with friends and family, and we'll see you on the next video.